The debt ceiling, the media's crisis du jour. Let's see what the markets think about it. Stick with me. My name is Bryan Cannon, and welcome to Markets in 5. So we've been getting a lot of calls from clients who are concerned about the market and the debt ceiling and its impact on the market and their portfolios. And, I wanted to address this Markets in 5 kind of geared toward that today. To me, I think it's a bunch of hogwash, quite frankly. We're trapped between two worlds, the what the media tells us or wants us to believe, and ultimately what the market is saying. And I tend to follow the market. I tend to follow what the market does versus what the media is telling us to do. So, so if we look at the market, right as of right now, all this fear, all these headlines, all this stuff that's just kind of scaring people, we're talking about just a little tiny, basically nothing. When it's concerned on the market, as of right now, all the moving averages are heading up. You've got some choppy RSI, so again, I've kind of talked about, I think we're in this stage where it's going to be just kind of a choppy, sideways, ugly market for a while until we get some direction. But no major red flags are popping up really anywhere on any of the things that we're seeing. So, I'm not really seeing anything that's of a major concern. Now, could this thing break down? Absolutely. And if it does, we raise cash, we sell positions. But if it doesn't, and it continues to chop around, then we're going to want to find opportunities and take profits where we can, and hunt and peck for opportunities. But I'm not seeing anything again. Here's the MACD is kind of crossed over and just real choppy, but it's still positive. So it's just kind of drifting right now. So everything is just drifting upwards. So again, at this point, I just think I would probably turn the news off and not worry about it. The market's going to do what it's going to do, and we're going to follow the market. Really don't care about the media. All right, so if there is a crack in the dam, it could be here. The NASDAQ has really led the way off the bottom in this breakout. So it's really created some separation between itself and the 200-day moving average, which is the red line here. And so theoretically, that's a good thing, right? It is, but it's also healthy to have broad participation across a large segment of the population. However, I don't think that's the case right yet. So you're seeing a wide gap between the NASDAQ and its 200-day moving average. However, the percentage of companies below their 200-day moving average is 33%. So there's a large percentage of companies that are not participating in this move upwards. So again, it's just something that we need to keep our eye on. So for instance, if this case were to continue, then you would assume that as soon as the large companies start or stop continuing to climb, that that it could fall, and that could be the case. So again, we're going to be watching that very, very closely. All right, to round out this episode, I'll take you through a couple of our trades from our Cannon IQ strategy, just to update on some ones that I've kind of previously mentioned in other episodes. So we got a buy signal in Acadia down here, and we took some profits along the way. But left about half the trade on, and inside of about 36, 37 days, the trade's up over 27%. So it's been a really, really good trade for us, and quite frankly, it's hit our profit goal and broken through it and continued. So as of right now, it looks like it could come all the way up here and reach the prior top level. Maybe around $27 or so, and I imagine that's probably where we'll close our position and take our profits and move on. All right, here's another position, SGH, Smart Global Holdings. They're in the chip sector, which of course has been running, but essentially, we got a buy signal here. It was able to break out of this downtrend and really just skyrocket up. So we actually did close our position on this one inside of a very short period of time. Was able to get around 23% on this trade in a very, very short period of time. But it hit our profit margin, hit prior tops, and could it keep running? Yeah, absolutely. Can we put the trade back on? We certainly can. But we felt like it was a little extended. It more than likely has more room to run eventually. we just felt like that it could come down before it really swings back up. But who knows? But either way, we walk away. So in wrapping up, I think you can see where I stand. I just personally don't believe that this debt ceiling is going to be an issue. I think it's just going to be a blip on the map that we're not even going to remember at the end of the year. But essentially, right now, it's all the media has to grab onto. So they're holding on tight and scaring the pants out of everybody. But look, we're in a free and open market. Anything can happen, and so I think that's why it's just important to have a process to take risk off the table when necessary, and to put it on when the opportunities exist. So. That's what we do. So, but if you have any questions, give me a shout, and I look forward to seeing you on the next Markets in 5.